Hello again, Maverick traders, and welcome out to another market recap. This is Sankis from Maverick Currencies, and let's begin our market coverage. Hope everyone had a good start of the week. Let's do a quick market analysis and see how the markets moved today. And if you take a look at the market performance today was a little bit of a dud here. We didn't see a big movement in the markets. Again, we can see that in the percentage change, everything was very much in the small range. S&P only up 0.05%, so it was mostly flat. So same thing with the World Stock Index as well. We have the gold market, which again 0.22, not a big change either. We have the oil, which is continuing to rebound at 2.06%. The big move was really in the crypto markets. We have seen crypto down to 4.58%, and right now crypto seems to be in trouble here. So we'll take a look at the charts here. So let's take a look at the chart for the S&P, and we can see that we are in this wide range. And until we really break out one way or the other, we are expecting some range bound trading. And in range bound trading, we're expecting sellers to come in at the resistance. Same thing as we get towards the bottom area, we're expecting the buyers to come in. We can continue moving in this range for upcoming week or so before we can really break out. So until then, that's the game plan here. Now looking at the gold, gold has been one of a very better performing asset class in the past couple of months. As you can see that it's still holding on to the gains. We had a big breakout last week, which it reversed, and right now we're just consolidating. So this thing can still move out one way or the other. I think right now it's in a consolidation phase as well. We are not breaking out, but we're not really breaking lower either. So we really have to wait and see where the gold market goes. Now looking at the yields, and this is another thing that we have noticed this week, is a disconnect between the bond yields and the US dollar. So you can see the last 3 days we have seen a recovery in the bond yields. But on the other hand, the US dollar had remained weak. So we'll have to monitor that. But so far we have a support in the bond yields. I think at the same time right now, this is also consolidating. We have the US CPI on Wednesday, and we can expect a big move one way or the other. But so far, we have to treat this as a range-bound price action. So looking at the performance today in the crypto world, again, the biggest loser was really Litecoin, down 7%. But outside of that, you can see the Bitcoin was down 3.5%. Ethereum down was actually a little bit less. But overall, if you take a look at charts for cryptos, it's not really looking good here. We are showing a bit of a head and shoulder pattern. I think our next move in the cryptos could be lower. Now let's take a look at currency market. And I don't recall the last time I have seen all currencies down except the Aussie and Kiwi. Usually we've seen a negative divergence between the dollar and the yen. We have seen the negative divergence between the euro and the Swiss franc. That was not the case, and I'm actually very surprised here. So all the concentrated move was in the Kiwi, followed by the Aussie. This is really where the money is flowing. But again, dollar has been weak, but you got to realize that right now, based on today's performance, every other currency, like the euro or the yen, even Swiss franc, they were all weak. So we have to really look at this and see where is the next big move likely to be. Outside of the Aussie and Kiwi, we have to pay attention to all these 4 or 5 currencies and see where the next big move likely to be. But overall, it seems to be pretty much same across the board. Now, looking at the performance or the outlook here, we're still sitting at +1 because, again, range-bound price action. We don't want to be trading this as a super bullish or a super bearish. So we need to just be right in the middle with a slight positive outlook. Now, looking at the calendar here, I think the fireworks will start on Wednesday with the CPI numbers. And with the CPI numbers, we have to see if there's any sort of surprise element to it. Remember, if there's no surprise, we don't expect a big move. Market does a good job at pricing things in. So this is where all the focus will be on that. I know there's a disconnect between the dollar and the bond yields. We'll see which one really catches up with which one on Wednesday. So until then, we're expecting to just trade the market in front of us. So let's do a quick market analysis, currency analysis, and see where the velocity score is. And again, you can see the velocity score is pretty spread out here. The Aussie and Kiwi is the only currency that's benefiting here, but the euro, yen, dollar are down weak -2, and the pound and Swiss franc as a -1, and CAD is right in the middle here. So in this kind of price actions, you can see that we can diversify ourselves, not just with one currency, but we can diversify between Aussie dollar, but we can also diversify between Euro, Aussie, or even Euro Kiwi as well. So until this price action lasts, I think we have a lot more options available. But if we start to see some change in these velocity scores, maybe that's where we'll have to make a change as well. So let's take a look at possible trades ahead and see what do we like as far as the technicals goes. So one of the questions I got today was about the dollar. If you take a look at dollar, the price action in the dollar, you can see that we are consistently moving lower in the past 5 trading or 6 trading sessions. But realize that we are right at that support. We tried to break that support here, here, and here. And each time it did rally. So until the support is really broken, I think the dollar is kind of right in the middle for me. A couple of the other currencies that I'm looking at just to see if there's a broader breakout move in the dollar. Take a look at your dollar CAD. We had a very nice move in the past couple of days, got us down to the lower end of the range. But again, if you look at it in a grand scheme of things, this is still a range-bound currency. If this can break below 132.70 area, then maybe there's a little bit more room for this to fall. But until then, this still looks range-bound to me. Now take a look at euro dollar. Well, euro dollar has been trading in this little sideways range here. We are making this ascending triangle between this moving averages right here. But you can see that this is not breaking out. So, this is why I think dollar is not moving or breaking out across the board. Maybe it's just moving against the Aussie and the Kiwi, but outside of that, it's still sideways to me. Dollar Swiss franc, I think is the same boat here. We got a nice support over here. Again, we are moving lower, but at the same time, if you look at the last few weeks of price action, we are not really breaking new lows. We're still holding on to this level here. So keep an eye on these pairs if you're trying to figure out if this broader dollar breakout is taking place. If it's not, then we need to just treat it as a range-bound currency. On the other hand, we have Aussie. Let's take a look at currency basket. And Aussie and Kiwi, they are continuing to be the strongest currency. And I know this really caught a lot of traders by surprise because this was one of the weakest currency. And we have just seen a one-way move with not a whole lot of pullback. So where is the next level of support and resistance? If you just draw this channel right here, and I think this is where we have just seen a breakout out of this channel here. So with this channel breakout, I think we can get up to this level here before we run into some sort of resistance area. So this is the first level right here. So, and then we have a further resistance up there in that level. So I still think that this is really where the money's going. But again, you want to be, abandon the ship once the moves start to go somewhere else. Same thing, Aussie, they were sitting very weak and they are now, getting stronger. So for the short term, that's where the momentum is. 4-hour charts, we'll see that we are actually, especially on the Australian dollar basket, we are running with a resistance here. If this pulls back and maybe try to get above this, I think we can see a bit more money flowing into the Aussie compared to the Kiwi. But they're kind of doing the same thing. But the Kiwi is definitely taking the lead here. But outside of that, Euro has taken a big pullback. You can see just straight down, like after breaking lower here, the Euro looks pretty weak. So on the daily chart, you can see that we are now below the 20 and a little bit right at the F50. This is where I think we can see a bit of a pullback, sort of a bear rally. Use this prior resistance as an area for this to roll over. I do like a little bit of a rally to short into in the European crosses. Same thing, Swiss franc. They did pull back lower here. I think any sort of rallies could be short-lived, but we'd love to see those rallies to use that as a shorting opportunity. Now, British pound, it's holding steady here. So this is where, no unusual outlook on the British pound, but outside of that, I think it's pretty clear where the money's flowing. The Canadian dollar, which had an impressive move last week, you can see it's just stalling right here. So at this point, I think the CAD doesn't really have a sticking power. It's not really holds most of his time here. So I think we have an impressive rally here, but at the same time, no follow through. And if this is the level that I've been looking at for a further breakout, if it doesn't break out, I think it can easily fall lower as well. So these are the areas that we'll be paying attention to. Like I said, for now, a lot of the charts that looks a little bit extended to me. I would love to see some sort of bear rally pattern. I mean, this was a nice little low base pattern here. We got a nice little breakdown here. But for now, I think we need to maybe take a little bit of a pause and sort of a bear rally short into. I still think Wednesday will be a better trading environment. But until then, maybe focus on currency pairs like Kiwi CAD, which is also have a very similar pattern compared to the Kiwi dollar. I mean, if this breaks above this 85 area, I think this can further go up as well. Same thing with the Aussie CAD. Aussie CAD has also been in this little downward channel here. So I think maybe we can see a move in these areas. Outside of that, if you are trading Kiwi dollar, Aussie dollar, they do look extended to me, but I think any sort of pullback seems to be a buying opportunity here. But like now, it looks a little bit extended to me. So I'll be looking at this in the next 24 hours and see if there is sort of a basing pattern that we can kind of come out of. Last pair is dollar yen, and I know dollar yen was one of the currencies that we were watching, especially off of this pullback here. Right now, technically speaking, it's still holding on to these levels. So this is where I think we can see a little bit more of a recovery in the dollar yen cross as well. And similarly, we can see further continuation in currency pairs like the Aussie yen and the Kiwi yen. So those are the areas, again, we'll be still hunting. If you're looking for a change, if you're looking for markets to do something different, we need a news catalyst for that. And I think that will be Wednesday. So stay tuned till then. Meanwhile, keep the powder dry and just focus on the next big opportunity here. So take care. We'll see you next update. Cheers.